What's going on, guys? Welcome back to another video. In this video, we're going to be talking about the recent market correction that we have seen across the entire broad market. We're going to go over exactly why the market has been correcting, and I'm going to show you guys a couple of key data points that suggest even further why the market has been correcting. And these are going to be things that you guys definitely have not seen before. So make sure you guys stick until the end of this video, because I've got a lot of key information in this video for investors of all kinds, so we can figure out exactly what our game plan is going to be for the end of the first quarter of 2021 and throughout the end of 2021 as well. So before we get into all of that information, if you guys enjoyed this video, make sure you go down and hit that like button and hit the subscribe button, and make sure you turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So if we look at the chart of the SPY, which is the ETF that tracks the S&P 500, the broad market in total, we can see that it is just about given up its 2021 gain. So on the current day, we actually saw the S&P 500 dip down into this 374 level. I'm sorry, the SPY dip down into the 374 level, and we are seeing a little bit of a bounce today. We did see Fed Kashkari come out and say a couple of different things about the market. He says we're not worried about inflation. We have enough tools to manage it. Now, we can see back in September, we also saw the market correct from around 357 all the way down into 323. And then in October, we also saw another correction from this 352 level all the way down to 324. Then we also had the election, and we've just been on a pretty significant uptrend. So a lot of what this market correction has to do with right now is the rise in treasury yields. What this rise in treasury yields, specifically the 10-year T-bills, is suggesting is that the interest rates could go up sooner than expected, and the Fed can raise these interest rates sooner. So the market does not like this. We've seen Jerome Powell come out time and time again and read from his script saying that it's going to not be until 2022 when they think about raising rates, but the market almost thinks that he's lying. That's why we're seeing this correction. The market overall is looking at all of the different indicators and thinks that rates are going to go up sooner than our Fed chair is leading us to believe. Now, we also have inflation concerns. As the overall economy starts to reopen, we are going to maybe see some inflation, and we are going to have to manage that. So typically with inflation, we would see a rise in gold prices and a rise in the dollar, or a fall in the dollar. But if we look at GLD, we can actually see that they have fallen as well over the past couple of weeks. So there is something different going on here. Now, what I think is actually happening is a couple of different things. So let's go and take a look at the 10-year Treasury note. So at the current time, this has a yield of 1.561. So if we come over here, we can see that the S&P 500 index, the SPY, is paying a dividend yield of 1.5%. So there is some risk involved when you invest in one of these market tracking ETFs, and you are going to see somewhat of some price volatility in the underlying asset. So if you are getting a 1.5% yield and you are going to have more risk, you would expect to see a higher yield than essentially the risk-free treasury note over here. And that is not what we are seeing. So typically when the 10-year treasury note yield goes above the dividend yield for the S&P 500, nothing absolutely insane happens, but it is interesting to note that money could start to flow in one direction or the other. Now, a lot of what the price action has to do with on these big ETFs, let's head back over to the S&P 500, is what the big money is doing. If big money can get a higher yield with lower risk, they are going to take that, and we could see some of these institutions transfer out of their equity positions and back into bonds. But here's another thing that you need to keep in mind. The inflation target that the Fed has been talking about over the past year has been 2%. And we can see that the 10-year Treasury does not exceed the inflation rate. So it doesn't make sense if you're expecting 2% inflation to go with a risk-free asset that is going to pay you 1.56. Your real return on that investment would actually be in the negative. So in my opinion, there is actually a couple of other things going on. If you take a look at retail traders, I actually want to hear from you guys in the comments. I want to know how much money, not like how like total money, I don't want to be too invasive, but do you guys still have money to invest and buy the dip on these positions? Because from what I've been hearing around the internet is that some of these retail traders are running out of their cash in order to put more money into the market, so they can't buy these dips. So retail traders are running out of their cash balance, and institutions are also doing something similar. So as we've seen over the past year, we've seen a massive boom from these March lows. Now, what really had the most amount of upside was tech. So at the current time, about 2 weeks ago, really, tech is kind of getting overvalued. We've seen Tesla at some pretty incredible price levels. We've seen a lot of other technology companies have pretty insane valuations. And what I'm thinking is going on is that the institutions are saying, hey, we think that tech is overvalued and there are other better options for us in 2021 for us to get our returns and beat the market. So what I think that they are going out and doing is repositioning out of some of these tech positions and going into companies like, let's see, FedEx. Let's take a look at the FedEx chart. So FedEx is actually up 0.26% today. Home Depot, they would go into. Home Depot's pretty flat. These are all of the value companies. So there is a value rotation coming on right now. And if we go over and take a look at some of the hyper growth stocks that we've been talking about on this channel, like NNDM, let's pull up Nano Dimensions chart. We can see that they are down a very incredible amount from its highs. We were riding this all the way from around the end of December and January at these $9 price points, maybe a little bit earlier. And Nano Dimension has had a significant sell-off. Bionano Genomics has also had a very significant sell-off. We can see that they are back down in the $6 range. We see Palantir is trading significantly lower. There's a couple of different reasons why Palantir was trading lower. They did miss a little bit on their earnings. They had their share lockup period expire, and then the overall market. Now, NIO has to be the biggest sell-off that we have seen, in my opinion, and the biggest shock. So NIO, in my opinion, anything below 40 is an amazing buy for NIO. They're just a great company, in my opinion, for the long term. I don't think there's really any reason for them to be trading in this range. We haven't seen this price level on NIO since, let's see, last October. This is an unbelievable buy if you want to get into some of these hyper growth stocks for the long term. Or you could follow the big money and go with the value rotation. So I'm going to go over some of these strategies that we can get into right now in order to best position ourselves for the market going forward. So we're going to go on this 1-year chart for the S&P 500, and we can see that this sell-off is not nearly as big as what we saw in October, September, and we saw one in June, and we also saw a massive one last March. If you talk to anybody who has been investing in the stock market long term, and if they were an individual that sold last March, I'd be willing to bet that they regret that decision a lot. So this is I think this is very similar to a March type situation, even though we're not seeing such a significant crash. I think there's so much opportunity in the market right now to buy these dips that it would just be smart to start averaging down on these positions. Now, I want everybody to kind of relax. Everybody is freaking out about the hyper growth stocks selling off and not having not living up to the expectations that we have put out for them. Now, what you really need to think about is you got to ask yourself a couple questions. Are you an investor or are you a long-term trader? And do you like these companies long-term? If you like the companies that we have been investing in for the long term, These dips are just unbelievable buying opportunities. We never thought that we were going to see NNDM below $8, $9 again. We never thought we were going to see Senseonics go this low, NEO, or even Palantir going into the low 20s. These are just great buying opportunities, in my opinion, for the long term. Now, for me, my long-term portfolio has an investment horizon, and for me, of about 20 to 25 years. So these short-term dips don't really mean much to me. It just gives me more opportunity to buy more. And another thing that we need to keep in mind is that the overall market is selling off in total. It's not like any of these individual names that we have been talking about have had just terrible news that have caused these 40 to 50% decreases in share price. It's the overall market acting out. There's a lot of inflation concerns. There's a lot of concerns over this 10-year treasury rising, and there's a lot of different ways that we can position ourselves. So one of the plays that I've been looking at for a little while is going to be TLT. So TLT, if you know anything about this ETF, it does track some bond yields in a very interesting way. And you can see that right here. There's an unbelievably massive run up, and this was back in March of 2020. So there are some opportunities, and it is possible for TLT to freak out again, but this is definitely something that you need to watch out for in the future. In general, though, in my opinion, nobody needs to be freaking out. This is not going to last forever. Everybody was going absolutely crazy back in March. Everybody thought that the market was going to absolutely crash, never come back. And what did we see? We saw government intervention. They came back in, pumped up the market, and everything ended up fine. We are now seeing the effects of those decisions by our government, but I don't think that anything's going to get way out of control. I think that the best thing that individual investors and retail traders need to focus on is mainly just averaging down in their positions and having conviction and confidence in the investment decisions that they made. If you have a lot of confidence in a company for the long term on their fundamentals, a 1 to 2 month trading period is not going to change the fundamentals of a company unless they come out with terrible news, which we really haven't seen with a lot of companies. We did see this with Workhorse, which did cause a very significant decrease. They did lose one of their very significant contracts, but in general, a lot of these companies are just having a sell-off, and everybody, I think you just need to relax a little bit. It's not the end of the world. Just average down, in my opinion. Now, I'm not a financial advisor. Nothing I say in these videos is financial advice, but conviction in your plays, confidence in the companies that you have invested in, and overall good trading fundamentals is going to help you for the rest of 2021. So that is going to be it for this update on the overall market. If you guys enjoyed the information that I provided for you in this video, make sure you go down and hit that like button and hit the subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a decent day, able to mitigate some of your losses, and I hope this video was able to give you a little bit more insight into what is going on with the overall market. So that is going to be it, and I'll see you guys in the next video.